So what I'm going to get, Ben, would you like to come up and take everyone through your market analysis here, please?
Cool. So this is just like a 30-minute chart right here. So each one of these candles is 30 minutes. And one thing that I would want everybody to understand is, for example, like right in here, for example, green and red candles work differently. So what's happening in here is, let me find it really, okay. So take a look at this candle right here. What's happening is this 30 minutes right here ended, and then it opened right here. Green opens at the bottom. Green always opens at the bottom. Now, if it actually would have started to go down in value, this candle wouldn't have been green. It would have turned red. But what happened actually is it started going up in value, and the longer these candles are, the more volume there is. So decent amount of volume, a lot less volume here. But this closes, the green opens at the bottom, it goes up, and then it really just springs up and it bounces down. When you have a candle where it goes way up and then comes down and overlaps itself, it forms what we call a shadow. So this is an upper shadow. You have an upper shadow, you have a lower shadow. They're also called wicks, an upper wick or a lower wick. When you have a giant ass long upper wick on a green candle, it's oftentimes a symbol that the coin has been overbought and it's going to go down. And sure enough, it gets overbought and it ends up gradually going down. Likewise, when you have a long lower shadow on a red candle, it's oftentimes a symbol that has been oversold, and then it's going to pick up buyer support. It'll go up. Now, that's one indicator right there. Upper shadow on a green candle, long lower shadow on a red candle. That's one indicator. I would never go, okay, I'm going to make a trade based on one indicator. I use multiple. I use a thing called Bollinger Bands. I use RSI, which stands for relative strength and resistance. I look at moving averages, which we brought up earlier. I look at a whole bunch of stuff. But that's how candles work. Green's going to open at the bottom, close at the top. Open at the bottom, close at the top. Red's going to open at the top, close at the bottom. So what happened here with this green candle is it shot way up, and then just as hard as it shot up, it came down, it closed at 30 minutes, and it opened again. Same thing kind of happened here. And then when this red one started, it actually started to go up. You can barely see it, an upper shadow right there. And then it came down, it actually went down farther, and then it lapped itself. And when it lapped itself, it formed that lower shadow. And so that's what happens with candlesticks. And once again, does that make sense so far? Nod your heads yes, thank you. Okay. 30 minutes. Each one of these is 30 minutes. I did my math wrong because I'm an idiot here. This says 3.5 hours. But if you look over here, you can see where I bought low at 2,980 Satoshi. And then you can count like 4 or 5 candles or whatever there, and I sold at 3502. So in a 2.5 hour period of time, I put this together for you guys. That was, at the time, that was 0.2 Bitcoin that I threw in, which was worth $2,536. That bought me 6,711 Syscoin. I sold 8 cents up. So whatever that was, it could have been 21 cents and I sold at 29 cents. But in that 2.5 hours, that created a 21% gain or a 121% ROI, which came out to a $536.88 profit. And so that previous chart that we showed, that was like long-term or longer, several months. This is showing literally like a few hours. So what I personally recommend to people is there's people that are in it for the long term, and there's people that will like make a 24/7 job out of looking at a chart and seeing if it's going to move. And if you're doing that, you're stupid. Like, you're dumb. Just do something else with your life, because you can get really addicted to this. I personally, I have short-term mentality. I have an intermediate, which would be your swing trades, and I have a long-term. And if you can learn all of those mentalities, then you're going to come out ahead. Because, in my opinion, and you guys could all correct me if I'm wrong, but say you dumped $100,000 right now on 10, 11 Bitcoin, and then you held on to it. And say a year from now, that is now worth $200,000. Great, you have a 200% return. But what if you took advantage of very obvious, easy opportunities a couple times per year or a few times per year, and instead of only having 200K at the end of the year, you've actually been able to take that 10 Bitcoin and buy low, sell high, and take advantage of swing trades to where this time next year, instead of having 200, if you just kept it there and left it, you now have 300, 400 grand. So I think it's important to have those short-term and intermediate and long-term mentalities, or at least have a good fundamental understanding of those 3 types of mentalities, if that makes sense. What do you guys think?
I think he's right.